Hello and welcome. You are watching Last Tick here on News 9 Live. I am Krishna Kumar. We begin with how the markets have closed for the day. Sensex and the Nifty closing marginally down. There you go on your screens. Nifty down 0.15% in the red, closing below the 22,500 mark. Sensex also closing below the psychological 74,000 mark, barely in the green, 0.02% over there on your screens. Nifty mid cap and small cap continuing to be in the red. They opened in the red and they continue to be in the red. Nifty mid cap down about 0.5%, while the Nifty small cap is down 1.5%. India's volatility index continuing to climb. It's at 13.5% up. So that's the broad picture as far as today's trading session is concerned. And there you have the list of gainers and losers. Nifty Bank down in the red, metals in the red, PSU Bank down over 3.5% in today's trading session. We have Shrikant Chauhan, Head Equity Research at Kotak Securities, now joining us live on this broadcast. Shrikant, thank you so much for taking time out to be with us here on Last Tick. First up, we'll understand how the markets have closed for the day. What is your reading? Nifty below the crucial 74,000 mark, and Sensex, beg your pardon, was below the crucial 74,000 mark, and Nifty below the 22,500 mark as well.
Yeah, good evening, everyone. I think, the markets are facing some difficulties to sustain at higher levels, and it happens whenever there is any major event. This time also we are going to face the major event of the end of this election period on 20th of this month. Maybe that is actually bringing a lot of volatility in the market. Around 22,800 in the past week also, we saw a good amount of profit taking from there. All the way the market fell to 21,800 levels. So currently the market is consolidating within the range of 22,800 and 21,700. But in last 2 days, if you see the global markets and global macros, then they are turning positive for emerging markets. You can see that the treasuries fell from the highs. Dollar index is at 105 from the levels of 106.5, and crude is at comfortable level of 83, 82. So I think that is going to support the market. But because we are heading towards the major event, I think on the upper side also we are going to see some profit taking. On the dismissal of 22,800, we are expecting short covering in the market because FIs are consistently increasing their shorting positions on indices. So I think that is all actually creating some pressure in the market. But broadly, we are of the view that if there is any correction in the market, then our strategy should be to add good companies, strong companies to the positional portfolio.
All right, good companies, strong companies should be in your portfolio is a word coming from Shrikant Chauhan. Shrikant, just stay with us. Let's also understand how this markets for the day. Bear in mind, it's been a choppy session. Markets were expected to do well on the basis of positive cues coming in from Wall Street. Bear in mind, Wall Street closing out the last week on a high because of poorer than expected, softer than expected US jobs data, and that led traders on Wall Street to believe that there is a possibility of not one but two rate cuts from the US Federal Reserve going forward, and that witnessed the Nasdaq closing up nearly 2%, whereas the Dow and the S&P both closed over 1%, and markets were expected to open a little higher, and they did, but then it has been a choppy trading session. That's what the reality has been for the day, and you have the Nifty Sensex testing resistance levels, and Nifty mid-cap and small-cap continuing to be under pressure. That's how markets have traded for this trading session. Let's quickly take a look at all the sectors for the day, the gainers and the losers. Nifty PSU Bank index down over 3.5%. Bear in mind, RBI came up with draft rules which tightened infra project financing, that hitting all the PSU Bank stocks, and that's the reason why you see that 3.5%, the biggest loser as a pack for the day, the PSU banking pack. Apart from Nifty regular bank, down 0.06% in the red. Nifty metals down nearly 1%. The Nifty media pack down over 2%. Apart from Nifty auto, which also witnessed choppiness, down about 0.07%. The big losers for the day. As far as the ones in the greens are concerned, Realty pack doing well, up in the green over 2%. There you go. 101 stocks hitting upper circuit, 107 stocks hitting lower circuit. That's the roundup for the markets. Advance decline ratio, 841 advancing stocks to 1,808 declining stocks, over 100 stocks remaining unchanged for the day. 21 stocks hitting 52-week lows, whereas 140 stocks hitting 52-week highs. That's the trading session in a snapshot for you. And at close, Nifty below that 22,500 mark, and Sensex closing below the 74,000 mark. Of volatility reigning supreme, choppiness reigning supreme in the trading session. Shrikant, let's talk about what happened with the PSU banking pack. There is that RBI's draft norms for lending to infrastructure and infrastructure financing, which seem to have knocked down the PSU banking pack.
Yeah, I think it is something which is related to tightening guidelines on project financing, and RBI has issued this draft. So it's still at the draft level, but I think the way they have this particularly presented, it is certainly something which is going to impact profitability of PSU banks as well as NBFCs, private banks, PSU banks. It is also going to impact on the capital adequacy, and also it is going to impact on the overall loan growth. But yes, there is a marginal impact, but still, because the market is trading with very high valuations, most of the time such type of guidelines or such type of tightening measures impacts the market very heavily. But if you see the overall guideline, then it is something which is going to come in the phased manner. Okay, so initially it will be something 2%. Later on, I mean to say, for FY25 it is 2%. For FY26 it is around 3.5%, and it will be fully applicable by FY27. So there should not be any major worrisome sort of thing. But because the market always discounts a lot of things well in advance, I think today we saw a good amount of profit taking in almost all these NBFCs which are trading, which were trading with high valuations. Also, if you just go through with the overall process of this particular guideline, then it is going to impact those companies where the loans are of very long durations. But if the loans or whatever the project formulation is very with low time duration, then on those particular loans it is not going to impact heavily. But broadly, we are of the view that because the markets are expensive, I think this particular guideline is impacting to the sector.
All right, that particular guideline impacting the PSU banking stocks down anywhere between 2.5% to 6.5% for the day's trading session. We'll take a short breather here at this stage. We'll be back with all the markets action on the other side. Don't go anywhere.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again, maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home, anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Rumors should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth. You're watching Last Take. I'm Krishna Kumar, and we are discussing the day's trading session, which witnessed a big gainer in the form of Godrej Properties. Godrej Properties up over 10% in the trading session for the day, ending nearly 11% higher on the basis of course, the fantastic fourth quarter results that came out. 14% year-on-year jump in net profit to at 471 crore rupees, and also all the talk about the projects that they're going to launch and the growth that they're expecting. Shrikant Chauhan of Kotak Securities continues to be there. Shrikant, Godrej doing fabulous numbers in terms of its earnings as far as the stock is concerned, and they are projecting 20% growth over the coming years.
Yeah, absolutely. Like the performance was much better than the expectations. It was mainly because of recorded pre-sales, new launches, and healthy revenue recognition, cash collection, and also if we just go through with the overall, its project launching date is consistently reducing despite of land payments. Management has also given strong guidance for FY25. So it's a very strong performance. But if we just go through with its price and its fair value based on SOTP valuations, then I think based on SOTP method, then it is somewhere close to 1800, 1900 rupees. And currently it is trading at 2900, 2800. So currently the stock is quite expensive. It is better to stay away from taking any positions right now. Broadly, we are bullish on the real estate sector, and it is mainly because of we have seen healthy residential pre-sales across key players in Q4 FY24, supported by continued strong demand and launches from major developers. Current real estate cycle also, if we see, then it seems likely to sustain, aided by structural improvement such as RERA, deleveraging in residential business, and most important, its consolidation in the sector. Strong demand environment has helped to retain the inventory at lower levels. And also, if we just go through with its overall operational performance, then all these major players are doing really well. So we are basically prominently bullish on all these large players, but in that specifically, we are bullish on stocks like DLF, Macrotech, as well as Prestige. So Prestige is having pan-India presence. Macrotech is slowly increasing its presence in other states, and DLF is having very strong land bank. So these are the stocks on which we are focusing, but for Godrej, we are of the view that it is expensive at current levels.
All right, Godrej stock is expensive, but if you look at the Nifty Realty pack, Shrikant, up over 2.5%, nearly 3% for the day. So it's not just Godrej Properties, but the Realty pack as a whole continuing to do well.
Yeah, yes, because of all this reason. Because see, in the past there was number of hurdles, and the overall regulation was not there. But this time, because of the implementation of RERA, and the overall demand scenario, I think the real estate sector is something which is really doing well, and it is going to do well for next couple of years. Also, the overall income level, if we see, then it is increasing, and maybe because of that, this particular sector is going to do well. In that, the important part is that the consolidation is happening. There are very few players which are really strong in terms of their overall brand as well as presence, like Prestige or maybe DLF or even Godrej. So it is something which is now in the hands of very few players, and that is why I think the sector is going to do well.
All right. So that's as far as India is concerned. I'm going to take the picture back to a broader global picture. If you can help us understand the way oil is trading right now, the way the rupee is under pressure. But in the meanwhile, Warren Buffett talking about the fact that there is a huge untapped potential as far as the Indian markets are concerned. How do you read the global signs as far as the Indian markets are concerned?
See, like India is doing much better as compared to other Asian markets, as well as if we just go through with the developed markets, then in that context also India is really doing well in terms of political stability, in terms of its inflation, in terms of current account deficit. It was not at all there in the past. This time the overall balance sheet of the government, if we see, then it is much stronger. Also, if we just go through with the capex cycle, then government is consistently trying to infuse more and more funds on the capex side, and maybe after the elections, when the stability will when the private players will see some stability, they will also start coming into the market, I mean to say, with increasing their capex capacity or capex overall activity. So broadly, we are of the view that India is like really doing well. But if we just go through with the overall the performance of developed markets, then there the inflation rates are very high, and that's the reason the bond yield is trading at 4.5, 4.7 levels, which is not actually allowing FIs to invest into emerging markets, especially Indian markets. If we start easing on the inflation numbers in the US or economic data, then what will happen, the interest rate will start coming down, and that will actually trigger the more and more funds exiting out of developed markets to emerging markets. So that trend is still means in the past we were expecting that the inflation will come down by March. Later on we were expecting on June, but now it is delayed to October, November. And that's the reason right now we are seeing market range bound. But if there is any sign in the global markets that the economic numbers are cooling off, especially in the US markets, then that will actually help equity markets to do well.
Okay. The only thing I have to ask you at this stage is that all important India VIX, so the volatility index up 13.5% for the day. Lots of talk about how volatile the Indian markets are. Indian markets have been, the way the volatility index, the numbers it touched over the last week. Lots of questions being raised. Is it setting the stage for what to expect going forward?
See, like whenever we see a jump in the volatility index, we have to consider that the traders, or maybe those who are like big players of the market, they are considering the coming event as the major event. So after state election, the market was just going up and up. That time there was volatility index was quoting somewhere close to 11, 12, but it is around 16, 17. That means, yes, they are going to see, they are expecting, I mean to say, all these major players, they are expecting major volatility during the event. And that's the reason this particular VIX are going up. Most of the time before the event, a lot of these top players who have good amount of investments in the market, they tries to buy out of money call options, out of money put options, and that's the reason the VIX goes up. So one thing is very clear, that we are going to see huge volatility during the this particular event, and at the same time, if there is any correction, then it will be an opportunity for those who have still not invested in the market. So I am of the view that if someone is still not invested in the market, it is better to stay away from taking any major investments right now, because the VIX are going up. That means we can see either upward or downward activity. In case the market comes down, it will be an opportunity for them to invest. If the market goes up, because of the valuation, we can even take profit on the position. So it is always better. But yes, whenever there is a major event, we see jump in the volatility index.
All right. So if you're saying that essentially, if you're not invested in the markets for now, wait to see how the volatility eventually settles down. That's the word coming from Shrikant Chauhan, Head Equity Research at Kotak Securities. Shrikant, thank you so much for taking time out to be with us here on Last Tick on News 9 Live. And with that, we've completely run out of time here. Thank you so much for watching. This is Krishna Kumar signing off. Coming up next is Business Plus.
India produces between 1,500 and 2,000 films every year, the highest for any country, but they get ignored at international awards.
The Oscars are basically